please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
The IT sector indeed has been one of the outperformers of FY19. In fact, in 2018, the IT index has seen an up move of about 25%. This coincides with the fact that NASSCOM, for the first time in its 30-year history, has a woman at its helm. Debjani Ghosh, an old-time Intel hand, has taken over at NASSCOM. Debjani, congratulations, and thanks very much for joining us here on CNBC TV 18, your first interview since you took over. So it's an absolute pleasure. Let me start by asking you about the outlook as far as the sector is concerned. The NASSCOM guidance for FY19 at about 7 to 9%. This is higher than the 7 to 8% that you had guided for FY18. Do you continue to feel that the sector will be able to deliver on this, given what you are seeing today?
Yeah, you know, the most exciting thing about this industry right now, and the sector right now, is that we have ahead of us opportunities that we have never seen before. Technology is today pervasive. It touches everything. It touches every single industry. It touches every single country. It's shaping not just the future and destiny of companies, it's shaping the destiny of countries, of nations. The need for services, tech services, the need for tech solutions, the need for IT to get integrated into your business strategy is tremendously high. We've never seen anything like this. I'm a strong believer that the opportunities ahead of this industry it's just tremendous. It's game-changing. It can rewrite this entire industry. Now, of course, in order for us to leverage these opportunities, we have to transform. Status quo is not going to cut it. We have to transform, we have to reinvent, we have to disrupt ourselves. So the industry is going to go through a process of transformation. It's going to go through it's going to go through a tough time in terms of transforming itself. But I think this industry is going to come out of it even stronger than what it had before.
So what do you anticipate? You said that it is going to continue to be tough times for Indian IT as they try and pivot themselves into much more digital services. You know, how long do you expect that transition to take place? And B, you know, what kind of investments are we talking about? When we talk about reskilling, for instance, which is going to be the #1 challenge as Indian IT moves towards this digital service model, what is the sort of spends that we're expecting?
I mean, first of all, I don't think I can predict when the transformation is going to end. But this is a mega transformation, right? And we are seeing the changes happening as we speak. We are seeing companies change their business models. Today, I mean, I'll go back to 2016. I think the digital revenue, which is coming from the new business, was around 14%. Today, the digital revenue has crossed 20%. We expect it to go to 38 to 40% in 2025. Right, so it's going to happen, and it's going to be the challenge is going to be the balance between legacy and new, because it's an and story for at least the next few years. So how do you balance that, and how do you ensure the legacy does not come in the way of the new? Right. So I think that's the huge challenge. Every single company today, IT company, is going through it. Global IT company, not just the Indian IT companies. Everyone is going through it, and everyone is figuring out for themselves what's the right balance. If you look at it, there are three things that's gonna pretty much shape success, right? First is talent. I mean, talent is going to define your competitive advantage in the future, and there's no doubt about it. So talent is going to become critical. You talked about the investment in skilling. I don't have an official number to quote here, but I do know that every single company pretty much has made it job one. Okay. It's one of their biggest priorities. The second thing that you will see is capabilities in new technology. You know, interestingly, Shireen, if you look at some of the data that NASSCOM talks about in its strategic review, the growth in IT services now is being driven by growth in bundled software. where you bring in a mix of different solutions to create an end-to-end platform, and that's growing. The demand for that is growing tremendously. The third part of it is going to be the strategic partnerships, the mergers, the acquisitions.
You see that? You see consolidation of domestic companies, or do you believe that MNCs, for the lack of a better word, global large IT giants coming and making a play here in India, picking up assets here in India, or collaborating in India?
What I see right now, if you look at all our companies, the Indian MNCs, and they are Indian MNCs with footprint in more than 80 countries.
Outside of India.
We can't keep calling them Indian companies. They're Indian. They're global MNCs, right?
Yes.
And we should be very proud that their origin is India. They are out on a shopping spree. And they have different strategies, but then if you look at it, all of them are making some fantastic acquisitions, right? Bringing in the talent that they need to bring in. And I think that's what's going to happen. Every company, wherever it is in the world, is going to figure out the right companies for it to buy, or for it to form strategic partnerships with, IP-led partnerships that we are seeing happen.
Speaking of the state of play today, whether it's the Gartner report, which basically says that global IT spending is up in FY19 versus FY18, we're not seeing that match with the revenue performance here in India. There is, in a sense, a decoupling. Do you expect this decoupling to continue till the time that this transformation that we spoke of is complete?
The problem today is we keep applying the old lenses to the new industry, and this industry is completely changing. So we keep using the old criteria that we use to determine success, and it doesn't work. It's not going to work. So the industry in the next few years is going to invest heavily in reskilling, is going to invest heavily in skilling and building that talent pipeline, which they're all doing, is going to invest heavily in building the right partnership strategy, is going to invest heavily in building innovation capabilities. So you will see these investments go up. So yeah, looking, and it's a mature industry.
Yeah.
Right? It's a tremendously mature industry. So I think expecting the same kind of growth rate that we saw in the last 2-3 decades is not fair. It's not fair.
So double-digit growth that we've gotten used to, and we're now down to the 7-8% kind of number. You're saying that this is now a realistic expectation to have.
I think
Forget the days of the double-digit growth.
Of the transition, this is a very good growth rate. It's a very healthy growth rate, right? But in the future, who knows? With the opportunities that we see, maybe we'll go back to double digit. But I really can't predict that.
Sure.
But for the presence, and given the task that's ahead of us, the task of completely disrupting the business model. I'm not just talking about the way we market or the way we sell. It's basic business model transformation. I think the kind of growth that we are seeing and the kind of performance we are seeing feels healthy.
There has been a decoupling as companies have started to grow. You're hiring less. And as we move towards more AI, that trend is perhaps going to continue. So what is a realistic expectation then in terms of the way that this industry, which has been a big hirer, is going to operate?
You know, I think we've done a fabulous job creating jobs, right? But I think going forward, because of the way technology is advancing and because it's bringing with it new ways of doing business, it's bringing with it disruptions in the business model, it's not going to be about how many people you hire, but it is going to be about the kind of people that you have, the kind of talent that you have, what the talent is capable of. I think what we will be looking at in terms of figuring out strength of companies is, again, the innovation quotient rather than how many people do they have. Their ability to innovate is going to be critical. So again, you know, honestly, I don't think anyone's figured out what the new lens is going to be and what are the new criteria, but we know that the old criteria is not going to apply.
But what is the kind of attrition that we should expect? I mean, is it going to be in the 1 to 5% kind of range, which is what we've seen, you know, most companies doing between 2 and 3%? What is the kind of attrition that you expect?
Immediately, I don't see that change much. I think we're still, this year we've said that we're still going to hire around 100,000 people, which is what we hired last year, net. So that's not going to change. Going forward, again, it depends on, but the reason I come to a number right away is because it depends on our ability to create new jobs. It depends on our ability to reskill people for the new jobs. I mean, NASCOM has been working with BCG to look at what are the technologies that will have the most immediate impact on job creation, right? So we've identified 9 technologies, and IoT is the lead technology, no surprise there. That's going to create new jobs, 55 new jobs that are getting created by just these 9 technologies. And we haven't even got blockchain in the list. We're going to add it. But so
55,000 new jobs, you
55
mean?
new job roles.
Not okay. No, job roles,
right? So this is huge. And if you just look at the last 10 years, Uber drivers didn't exist. You know, social media managers didn't exist. So with every industrial revolution, you do have displacement of jobs. Everyone, starting from the first one. And you get new jobs created. Now, the question is, are we putting enough time, money, effort, not just as an industry, but as a country, on creating these new jobs? Are we obsessing too much about job losses and you know, keep bringing up that story? Or are we talking about what does the government have to do, what does the industry have to do, what does academia have to do? They have a huge role to play in this. How fast are they transforming to ensure that we have not just created the new jobs, but we have the people to take these jobs? And we have to move towards, I mean, we have to seriously change the mindset.
Well, on that note, we will take a break and continue our conversation with Debjani Ghosh of NASSCOM. See you after the break. Welcome back. You're watching CNBC TV 18's Power Talk. We're in conversation with NASSCOM's Debjani Ghosh. Something that does capture most mind space when we talk about Indian IT is the issue of the H-1B visa. What are you currently seeing in terms of rejection rates, in terms of the time taken for scrutiny? Is that going up significantly? I mean, how big a challenge is this today for Indian IT, you know, in the current context?
It's an irritant, because the scrutiny is definitely going up. The scrutiny is definitely going up. It's becoming a much more cumbersome process, so it's definitely an irritant. But Shireen, I want to put forward some facts which most people are not aware of, right? Of the 65,000 H-1B visas that are given out every year, the Indian companies take less than 12%. To be exact, in 2017, they took 8,468 visas, right? Majority of the visas are going to non-Indian companies, and this is unfortunately a big myth that exists, that all H-1B goes to Indian companies, right? Now, there are 2 things about this. If you look at the top takers of H-1Bs, these are all the top US tech giants, and they're also the companies that are spending the most on R&D. And what does it tell you? It tells you the importance of talent. It tells you that the US does have a talent deficit. There is a, you know, the latest figure is around 2.5 to 3 million more jobs than people. I'm talking about IT and technology jobs than skilled people. It also tells you that India has a talent surplus, and that's a huge strength in today's world, right? So when it comes to the IT companies, if you look at the visa intake in 2015 and you look at 2017, it went down 43%, and it went down by choice. It's because we are changing business models
and hiring more locally.
We are hiring more locally because, as I said earlier, the new world is about co-creation. It's about, the old world was about writing a code and scaling it, right? Which gave us the cost efficiencies. The deals, if you look at today's deals, by the way, we talk about growth in spend. You look at the growth in the deal value, 128% up year over year. It's huge. And why? Because it's increasing in complexity. It's end-to-end platforms, right? And to do that, you have to be near your customers, right? So, and the wonderful thing about technology is that you know, push comes to shove, it'll allow you to work from wherever you are. You know, in today's world,
need a visa.
in today's world of digital twins and God knows what, you know, you can work from, you can still service the customer from where you are. But the nature of work is changing. So no, it's not a worry. It's an irritant at best, but it is not a worry. The rhetoric is surprising. because when you look at the facts, the rhetoric makes no sense. So we hope at some point the facts will stand out and speak for itself.
Well, you know, I want to talk to you about the landscape and for the lack again of classification, the domestic Indian IT companies versus the global players, as well as the in-house captive centers that have been set up. What are you seeing there? Because they seem to be growing at a faster clip than the domestic IT companies.
It's a great story, right? What we're seeing there is India today is becoming pretty much the preferred location for global captives. And it's being driven by access to talent and access to ecosystem. Now, we cannot take that for granted. We have to continue to strengthen both tremendously, especially the startup ecosystem, and I will talk a bit about that. We have roughly, 1,200 odd captives, if I'm not wrong, in India already. Just last year, 40 got added.
Okay.
The interesting thing there, the numbers are great, but the interesting thing is not the numbers. The interesting thing is the work they're doing. So while it started off with resource centers and just back-end support, today you look at it, they're playing a role in market expansion strategies. They're innovation centers. So you see also as the captives grow, you see a growth in design centers, innovation centers, centers of excellence, which is a fascinating story, and a fascinating story for us because it helps us build a much stronger ecosystem in country.
So since you're talking about the tech startup ecosystem, I mean, you know, there was a lot of hope and optimism and confidence around the launch of Startup India. You know, while things have picked up, and that's largely on account of this ecosystem mobilizing itself, there has been a degree of disappointment, whether it's with tax-related issues, approvals, so on and so forth. What are you witnessing there, and what is the need of the hour?
Need of the hour, India has to figure out an exit strategy for startups. That's the need of the hour. We really don't have one. It's amazing how difficult it is if you start a business and you figure out, okay, I'm on the wrong track. I mean, you know this as well as I do. It's so incredibly difficult to wrap it up and quickly move on to something new with a badge of honor. That, you know, okay, I've failed and I've learned, and it's just unheard of, and it's still unheard of. That has to change. I honestly think it's not about funding. Market access is improving, has to improve faster. But if we have to grow a robust startup ecosystem, we have to accept that failure is going to be a huge integral part of this ecosystem. We have to let companies exit without penalizing them and without, I mean, it's like a mental trauma to say I failed. That has to stop.
Well, speaking of mindset changes, Debjani, I also want to talk to you about the role of women, specifically in the Indian IT sector and in general as well, because, you know, we saw the maternity bill being cleared, and there was difference of opinion even then on whether this would actually help women or it would hold back the cause of women further. At least the latest data sets seem to suggest that it's actually worked against addition of women in the workforce. You know, what do you believe has to be tweaked there to ensure that it actually works for women, not against them?
I don't know if it's the bill that needs tweaking or the mindset of the employers
this is clearly, I mean, because now this is legislation.
No,
and
I know.
It's holding, especially hiring as far as
so
the
again,
smaller companies are concerned.
when you look at the data, and I know there's a new research study. I haven't looked at that, neither have I. But when I look at the data that we are aware of, there are layers. And we have to look at those, right? So what you see is that the bigger companies does not have a problem. In fact, most of them were already moving towards it. And what they have realized is during the life cycle of a woman employee, there are two vulnerable phases. One is when you get married, and the other one is when you have a kid. So if the company can support a woman through these two phases, then your retention rate goes up tremendously. Women stay back, and when women stay back, they're tremendously loyal. They're much more loyal, and that's a fact. And they do have an impact on profitability. They do have an impact on innovation, right? So I think the bigger companies have figured that out, and they've figured out that cost of that maternity benefit or leave is well worth it. You know, I think where you see the problem is the smaller companies, and that's where I honestly think it has to be about education. It has to be about looking at the total cost of having an employee you know, stay with you and contribute to you, and we can't apply the short-term lens here, right? So I honestly think we shouldn't rush into changing the bill, but we have to look at maybe a phased approach or something which gets people to realize the benefit of not losing that employee. You know, today's problem is we feel, okay, if she goes, we'll hire somebody else. And there's a huge cost there. You know, when we have to make employers understand that.
So I'll end then by asking you, Debjani, as I said, FY19, the outlook that NASSCOM has put out is better compared to the previous year. The key priorities now, or the key challenges that you're going to be working on?
Three key priorities. First, talent development. We want to accelerate the pace of talent development in India. One of our flagship initiatives, NASSCOM Future Skills. We're working with both industry and government to train around 2 million IT workforce and 2 million students to be workforce, you know, building the pipeline in the next 4 to 5 years. So this is a critical one for us. And this is training them for the future jobs, not just on the technologies, but training them for the future jobs, right? So that's one. Second, accelerating the pace of innovation and the innovation mindset in India. As I said, innovation is going to be about partnerships. Innovation is going to be about co-creation. So as NASSCOM, what can we do to enable the best partnerships to take place? Industry, academia, startups. What do we have to do to get all of them together to collaborate, to co-create, so that you know, we are able to solve the industry as well as India's problems in a way that we've not been able to till now. So that's a huge focus for us. The third area of focus is really about working with government and industry to drive the adoption of new technologies, which will create newer opportunities for the industry, both in India and internationally. You know, we work with METI to create new opportunities in Japan, in China, Nordics, and the response is pretty overwhelming. And we are looking at what we can do in India with the government. There's a new AI strategy that Niti Aayog has come out with. It's actually an excellent framework that has been created. So we'll be working with METI, NITI, and everyone else to figure out how do we move from strategy to execution, but that's going to be critical.
Well, Debjani, thanks very much for joining us. Here's wishing you the very best of luck, and look forward to chatting with you soon. Thanks for joining us here on CNBC
Thank
TV
you, Shireen.
18.
Always a pleasure.
Well, with that, it is time for us to wrap up CNBC TV 18's Power Talk. From all of us here, goodbye. Many thanks for watching.